Good evening, everyone. So today we will be treating support and resistance. So let me show you my MT4. This is my MT4. So we'll be treating support and resistance level. So in Forex trading, what do we call supports? This is a downtrend. This is a downtrend now. So these points, when you look at the charts, if you see any point like this is a support. You see the trend is coming down like this. When it reach here, it goes back, up. So this is a resistance. This is a support, this is a resistance. Then it keep on coming back. Then it makes here another support. It makes here this point. It makes here another support. It go back up and makes here another resistance. It makes here another resistance. So let me show you my whiteboard. Let me show you my whiteboard. This is an uptrend. This is an uptrend. Here is our support. This level is our resistance. Then it comes back again. This is our new support. It goes up. This is our new resistance. It comes down. This is our new support. It goes back up. This is our new resistance. When it comes down, it is the support. When it goes up, it is the resistance in an uptrend. Now, let me draw another downtrend. This is a support. This is the resistance. This is a support. It comes down. This is a support. When it goes up, this is a resistance. This is a resistance level. This is also a resistance level. That is how it works. Now, let me draw a chart. Here is our support level. When it goes up, it's our resistance. When it comes down, is our support. It goes back up, is our resistance. It comes back, is our support. It goes back up, is our resistance. Then, like that. So that is how, this is just a simple explanation on support and resistance. So we have, let us go back to our MT4. So now, in support and resistance, we have what we know as uptrend, we have downtrend, and we also have sideways trend. So when you see a pattern like this, let me remove this, my horizontal line. When you see a pattern like this is a downtrend. Can you see it's forming down? It's forming. It's coming downward. This is a what? This is a downtrend. Now, when you see a pattern like this, going up, going up, going up like this is our support level. This is a resistance. It comes down. It makes this our support level. It goes back up. It makes this our resistance level. This is called a uptrend. This is an uptrend. Now we have sideways trends where you see any trade ranging like this, going up, down, going up, down, going up, down. This is a sideways trend. This is a sideways trend. This is a sideways trend. So we have three types of charts. Let me show you here. The three types of charts we have. We have our line charts. We have our candlestick charts. We also have our bar charts. So let's look at it one after the other. These are our line charts. Line chart is best used when you want to know your support and resistance level because it doesn't have a wick. So, and it will help you to draw a perfect resistance and support level. So this is it. This is a line. This is a line chart. Can you see? It goes up, come down, goes up, come down, goes up, come down. These are resistance. It comes down. These are support. It goes back up. Our resistance, our support, our resistance, our support. So this is a line chart. This is how line chart looks like. So this is our candlestick charts. So let me enlarge it. Let me zoom it out so we can see it clearly. So this is our candlestick. This is the wick. The upper side here is called the high. The lower side here is called the low. This is open and this is close. And here is our body. Here is our body. This is a bullish candle, while this one represents a bearish candle. Represent a bearish candle. So let me I can even change it. Let me change the formats so we can see it clearly. The black one here represents a bearish candle. This is a bearish candle. And the white one here is a bullish candle. Is a bullish. So this is a candlestick chart. This is a candlestick chart. Japanese candlestick. And we also have what we know as a bar chart. This is a bar chart. This is it. The upper side is the high. This is the low. This is, can you see this bar charts? Here, it opens here, it closes at this point. At this point, it opens another one, it goes back up, it closes here. This is open, it goes up, it comes down and close here. At the spot where one is closing, another one will open. At the spots, when one is closing, another one will open. So this is a bar chart. And here is the body. Here is the body. So we can just take your time to study it, but the most useful one we normally use is the Japanese candlestick. Japanese candlestick. We'll later treat the functions and how we can identify each of these candles, how we can be able to identify them. So that is the three types of charts we have. So let's go back to how to draw a trend lines. A trend lines. For you to start trading, you must know how to draw a trend lines. You must identify it and know how to draw a trend lines. So let's draw and learn how to draw a trend lines now. You come here and select this. So this is a trend lines. When you see something like this, is a trend lines, you call it trends, trend lines. As I explained earlier, we have uptrend, we have downtrend, we have sideways trends. This is an example of uptrend. This is an example of uptrend. So to draw the trend lines, one side the other side will be higher than the other side. So this is just it. And for you to draw a perfect trend lines, it must touch at least 3 spots. It must touch at least three spots, 3 points in the charts. So for the beginner, you may not actually get how to draw a trend lines with the candlestick pattern. So you can just come here and select the line charts. So the line chart will show you a perfect trend lines. So this is a spot now. Can you see the chart now? It go up, come down here at this point. This is 1. This is 2. You don't force any trend lines into the market. When it doesn't fit, it doesn't fit. Don't try to force your trend lines for it to fit. So this is 1 spot. This is another one. This is 2. Let's look. So this one is not up to 3. This one doesn't give us a good example of trend lines. So let's search for another trend lines. At least it must touch at least 3 spots for you to call a trend lines a perfect one. And the more point is touching, the more stronger it becomes. The more spot is touching, the more stronger it is become. So we have one here. Yeah, I've seen a good example. This is 1 point. This is another point, making it 2. And this is another point, making it 3. So this is just a fade out. Can you see? It comes out of the trend lines and it goes back. When someone is an aggressive trader, so someone might think it's just the market will start coming down, which is not. So some people will have actually entered a trade from here and suddenly the market will reverse. So this is it. This is a trend line. This is a good example of trend lines. This is a good example of trend line. Let's look at another trend lines. Let's search for a downtrend. Let's search for a downtrend. This doesn't fit. So you don't fit a trend lines. When it doesn't fit, it doesn't fit. So let's search for another one. So this is another good example, but this is an uptrend. So it touched 1, this is 1 point, this is another point, and this is another point. At least we have, 3 points here as well, 3 points. And we'll be looking for a breakout. After the trend, we'll be looking for a breakout. Can you see the market breakouts here finally and pull back? Can you see, start trending, then pull back again. So this is a good example of trend lines. Let me look for one more example on downtrend. I've not seen a good example, any good example of downtrend. So let me change it to 30 minutes time frame. Let me check this one out. So we can just manage this. So this is a point 1. This is another point here, 2. This is another point here, 3. So when I have the 3 confirmation, then I will be waiting for a breakout. Can you see it finally break out here before it retests? So this is example of a trend line, downtrend. So let me show us example of a sideways trend. Example of a sideways trend. The market will just be ranging. We just keep on ranging. In and out, in and out, in and out. Can you see here? From here, it comes here. It fades out here. It fades out here as well. It's come back to the channel. It's come back here. It goes, come back, goes, come back. This is a good example of a sideways trend. Can you see? It touches these points. It touches this point as well. It touches this spot as well. Before it finally break out here. And when it breaks out here, it comes back to this spot as well it pull back here for the test. Then before it finally find its way down. So this is a good example of a sideways trend. So that is how to find trends. And also, let's look at how to find a channel. A trend is just a single line. So, but when I'm talking about a channel, we also have 3 types of channel. We have ascending channel, we have descending channel. We also have what we know as sideways channels. So this is a good example of sideways channels. Let's use this as an example. The sideways channels, it goes up, come back, it will be ranging in between this line, these 2 lines. It will be ranging in between these 2 lines. It will be ranging. Now let's look at let's find example of ascending channel. Let's try and draw a trend lines. You can try and draw another line. This is not fit enough, but for training purpose, I can just manage this so the video will not be long. So this is a channel. This is ascending channel. Can you see the market is ranging in between this channel? The markets keep on ranging in between the channel, keep on ranging in between the channel before it finally break out here. And when it breaks out, it pull back, its range pull back before it starts going to its direction. This is just example of ascending channel. But you can find a good example on your own. You can find a good example that it will touch like 3 points. This is 1 point here. We couldn't be able to find like up to 3 points here. So let's try and look for another channel here. Let's try and draw another channel here. So like this one now, can you see it comes here, it's reverse, these are our supports, it goes back up, it comes down, it goes back up, it comes down, before it now finally break out of the channel here. You can use this one as an example of a descending channel. So that is how to find channel and trend lines. Before you can call yourself a good trader, you must know how to use trend lines to find an entry and a channel as well to find an entry. So let's go to how to trade support and resistance. To trade support and resistance here, let's assume we want to trade this now. I want to trade this particular this particular channel I found. I'll just come here and enter my trade. Now I have a spot here, 1, another one here, 2. I'll find another one here, 3, making it 3. So I'm looking for opportunity where this market will break out of the channel. So the moment it break out here, this particular point, if at all, if I let's assume I'm an aggressive trader, I will take this trade immediately, break out of this channel. But someone that is trading conservatively is going to wait for pullback, and after the pullback is going to enter the trade. So we have two ways to enter and to trade. So it is just, you can be an aggressive trader, like you will be monitoring an entry. The moment you see a trade break out of your channel or your trend lines, you are going to take the trade. But if you are trading as if you are a conservative trader, when it break out of the channel, you are not going to trade immediately. You are going to take your time for the market to retest back for pullback. And when the market pull back, then you now make your entry. But as a conservative trader, you will be missing out of some entry, because some markets will never pull back. The moment they are out of the channel or the trend lines, they keep on going to that direction. But as a conservative trader as well, it will be saving you out of fade outs. It will be saving you out of many fade outs, because some trade will break out of the channel, and the moment they break out of the channel, they will reverse back into the channel. So it will be saving you out of missing trade, a lot of missing trade. So now let's assume I want to trade this. I want to trade this conservatively. Like when the markets break out of the channel, it goes back up. Then I'm going to set in my stop loss here at this point. My stop loss at this point, and target my take profits. And target my take profits here at this point. Let's assume my entry is here. My entry level is here. So where you are going to set your stop loss is you target the nearest resistance. If you are going for sell, you are going to target the nearest resistance. And where is my nearest resistance? This is my nearest resistance. Depends on your strategy though. So, and I'm going to target, if it is 1:2 ratio, if it is 1:1 ratio, if it is 1:3 ratio, depends on my targets. But if I am trading this aggressively, if I'm entering this trade aggressively, the moment it breaks out of the channel here, I'm going to enter the market immediately. I'm going to enter the market immediately here. And when I enter the market immediately here, by here now, I'll make a little profit. Then market will reverse back. By this point, I'll be in loss before the market starts coming in my direction. So by here, I can place my stop loss here if I want to trade this market aggressively. So you look at the nearest resistance and place your stop loss. That is where you are going to paste your stop loss. So that is if you are going for sell. Let's look at another channel, another ascending channel we can use to enter our trade. So let me use this. So let me use this as my channel. But you can find a perfect channel that is better than this. So the market comes in, goes out, comes in. This is a fade out. It goes back into the channel. It comes here, go back. If I'm an aggressive trader, can you see now, the moment the market fade out of the channel, can you see by here, by this spot, this exact spot, I will have entered a trade. And the market will go in my direction a little bit, then start reversing and go and stop me out. Can you see the same thing happens here as well? The same thing happens here. So here I'll be looking for when the market is going to break out of the channel, opportunity. So can you see it go back here, it goes up. Then finally the market break out of the channel here. The market break out of the channel. So when I'm looking for the test, if I'm a conservative trader, then when the markets break out here, I will not trade. I will not take any trade until it retests, then start going back upward. Then if I'm a conservative trader, by here, can you see, I will miss a lot of pips. I'll miss a lot of pips. But if I'm an aggressive trader, the moment it breaks out here, I will trade. I will enter my trade. Can you see? By here like this, I'll be in a lot of profits. Let me calculate it. By here to here. Let me calculate how many pips is it. Will give me, I will have catch 117 pips. But as an conservative trader, I will wait for the test here and enter my trade somewhere here. I will enter my trade somewhere here. Now let me draw a horizontal line. I will enter my trade somewhere here. So let me see how many pips I'm going to catch. Just 38 pips. Just 38 pips. Can you see? So that is how to trade a trend lines and a channel. That is how to trade them. So just understand that when you are trading a trend lines or a channel, a bounce will happen. A bounce will happen. This is a bounce. It's ranging in the channel, then suddenly it bounce, it fade out here before coming back into the channel. And this might fade a lot of traders. As an aggressive trader, someone will have entered a trade from here before it reverse and go and stop that person's out. So this is what we are going to do now. Every one of us, at least go and find, this is an assignment for everybody. Go and find at least three trend lines and 3 channel. 3 trend lines and 3 channel. 3 uptrend and 3 downtrend. And find 3 channel, which is the ascending channel, and 3 descending channel as well. So that is the assignment for us. That is the assignment for us. And show us, you can backtest. You can backtest. I've taught us what backtest means. So you can backtest and see what have actually happened before. So, and if you want to enter such a trade, how will you enter? You can indicate where you are going to paste your stop loss and your take profits. So this is how, let me show you how to example of how you can paste your take profits and stop loss. So I've already told us that when you want to paste your stop loss, now let me use this. When you want to paste your stop loss, your stop loss should be, I believe this one is going up. So my stop loss will be below, somewhere here. I might take profits. I will target, I'm going to target 1:2. Let us assume I'm targeting 1:2. So my take profits, my stop loss will be somewhere here. My stop loss will be somewhere here, below the nearest supports. So here is my entry. This spot is my entry. So, and I'm targeting 1:2. So I will select this symbol, these tools here, and calculate, drag it. This is 10 pip. If I'm targeting 1:2, which means I'm risking 10 pip to earn 20 pip. To earn 20 pip. So this is where I'm going to set my take profits. My take profit will be at this spot. This is 20. If I'm targeting 1:3, which means I will be risking 10 pip to earn 30 pip. So my take profit will be somewhere here. My take profit will be somewhere here. If I'm targeting 1:4, so I'll be targeting 40 pip. So my take profit will be somewhere here. So if I'm entering this particular trade here, it will give me 1:4, which means if I'm risking $100, I will have it in mind to earn $400. That is 1:4. If I'm risking $200, I will have it in mind to earn, if I'm risking $200, I will have it in mind to earn $800. So that is it. So you will show me this as well. Is where I can place my stop loss and where I can set my take profits. And you tell me how many risk reward ratio you are targeting. So that is all about how to identify trend lines and channel and how to trade them. So if you are not in training, make sure you watch this video. Before we continue, you must have watched this and understand what trend lines is all about and what channel is all about. So you must have understand. So watch it. If you don't understand, if you have a question on it, you can drop your question in group and I will make sure I attend to it. So I will stop the record now. So thank you very much.